the income tax return filing due date is fast approaching for the financial year 2021-22. Did you know that you can reduce your tax liability if you have incurred any losses during the financial year by setting off losses with the income? However, you must follow certain rules to set off and carry forward losses under the Income Tax Act. Watch this video till the end to learn all about the set off of losses. Hello and welcome. I'm Maheshri from Clear. We have assisted more than 80,000 tax experts and 6 million tax filers. Do subscribe to support us and get a clear explanation of finance concepts. In income tax, set off of losses means adjusting the losses against the profit or income of that particular year. Set off of losses can be of two types: intra-head set off and inter-head set off. Before making the inter-head adjustment, the taxpayer has to first make an intra-head adjustment. So what is intra-head adjustment? Taxpayers are allowed to adjust loss from a source under a particular head of income against the income from another source under the same head of income. This is called an intra-head adjustment. For example, loss of business A can be set off against profit of business B, where business A is one source and business B is another source, and the common head of income is income from business and profession. After making intra-head adjustments, taxpayers can also adjust loss under one head of income against income under another head of income. For example, loss from business can be set off against short-term capital gains. This is known as inter-head adjustment. Thus, the loss of business A can be set off against the short-term capital gains. There are certain rules to set off of losses of each head of income. So let's start with capital losses. Losses from capital assets are termed as capital losses. For example, loss from the sale of equity investments or sale of the property. Capital losses can only be set off against capital gains. Loss under the head capital gains cannot be set off against income under other heads of income. However, rules vary depending on whether the losses are short-term or long-term. Long-term capital losses can only be set off against long-term gains, whereas short-term capital losses can be set off against both long-term or short-term capital gain. However, capital gains, both long-term and short-term, can be used to set off losses. Many times it may happen that after making intra-head and inter-head adjustments, still the loss remains unadjusted. Such unadjusted loss can be carried forward to next year for adjustment against subsequent year's income. It is to be noted that unadjusted capital losses can be carried forward for 8 years immediately succeeding the year in which the loss is incurred. And in the subsequent years, it can be adjusted only against income from capital gains. Such loss can be carried forward only if the return of the income or loss of the year in which the loss is incurred is furnished before the due date of furnishing the return. Now let's understand how to reduce your tax liability by adjusting a business loss. Adjustment of loss from business depends on whether the business is speculative or non-speculative. Speculative business income includes income from speculative activities such as intraday trading. Loss from speculative business cannot be set off against any income other than income from speculative business. However, a non-speculative business loss can be set off against income from the speculative business. Loss under the head profits and gains of business or profession can be carried forward only if the return of income or loss of the year in which the loss is incurred is furnished on or before the due date of furnishing the return. Such loss can be carried forward for 8 successive years, whereas speculative losses can be carried forward for 4 years. In the subsequent years, such loss can be adjusted only against income from speculative business, where it may be same or any other speculative business. Did you understand how to adjust the business loss? If yes, please write clear in the comment section below. Apart from several other deductions, while computing income under the head profits and gains of business or profession, a person is allowed to claim a deduction on account for depreciation, capital expenditure incurred by him on scientific research, and capital expenditure incurred by a company for promoting family planning amongst its employees. If the income of the year in which these expenses are incurred falls short of these expenses, then the unabsorbed expenses can be carried forward to the next year in the form of unabsorbed depreciation or unabsorbed capital expenditure on scientific research or unabsorbed capital expenditure on promoting family planning amongst the employees. For example, business income computed as per the Income Tax Act of Mr. Kiran before allowing deduction on account of depreciation amounted to Rs 74,000. Depreciation as per the provisions of Section 32 amounted to Rs 1 lakh. What will be the amount of unabsorbed depreciation in this case? It can be observed that after claiming the deduction on account of depreciation of Rs 1 lakh, there will be a loss of Rs 26,000. This loss is on account of depreciation and hence a loss of Rs 26,000 will be termed as unabsorbed depreciation. Setting off rules from loss from house property are relatively generous. It can be set off against any other head of income but only to the extent of Rs 2 lakh in a particular assessment year. If the loss is not completely set off, it can be carried forward to the following 8 assessment years, but in such case, it can only be set off against income from house property. It can also be carried forward to the following 8 assessment years even if the return of income or loss of the year in which the loss is incurred is not furnished on or before the due date of furnishing the return as prescribed in the Income Tax Act. Let's now look at the important points to remember regarding set-off of losses. Loss from lotteries, crossword puzzles, race including horse race, card game and any other game of any other sort or from gambling or betting of any form or nature cannot be set off or carry forward. However, loss from the business of owning and maintaining racehorses can be set off against income from the business of owning and maintaining racehorses. Also, if an individual has any brought forward loss or loss needs to be carried forward under any income head, they cannot file ITR 1 or ITR 4. They need to file ITR 2 or ITR 3. Whereas crypto losses are concerned, the loss from the transfer of a virtual digital asset shall not be allowed to be set off against income from another virtual digital asset. The government has clarified that losses from one crypto cannot be adjusted against gains from another. Also, any unadjusted loss cannot be carried forward to subsequent years. However, this provision is applicable for crypto transactions in the financial year 2022-23. So folks, in this way the Income Tax Act allows you to reduce your tax liability if you have incurred losses. I hope this video was helpful for you. For tax filing or finance related queries, you can contact our experts by clicking on the chat link provided in the description box below. The income tax return filing date for financial year 2021-22 is fast approaching. You can easily file ITR on ClearTax. Use our platform to self-file ITR. Through our DIY plans, you can file ITR in just 3 minutes without manual entries. Also, don't forget to subscribe to our channel for more such informative videos and stay tuned for more updates.